To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Monday, 18th day of May, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, not to worry, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You'll also find us streaming live during the show on Facebook, YouTube, and Twitter. So open with a word of prayer. Father, we thank you for all of your blessings, for your mercy, for your grace, as we head into the new normal. We don't yet know what that's going to look like, but you've seen us through these past few months. We know that you'll see us through the future. Today, God, we pray for those who have health challenges and even those who have mental health challenges, people who feel isolated and anxious and helpless. We pray, God, that you would provide them every necessary support. For the homeless, those unable to practice the protocols of social distancing in the shelter system, God, we pray that you would protect them from disease and provide isolation shelters in every city. And for international travelers who are stuck in foreign countries, God, we pray that you would help them return home safely and quickly. And for Christian missionaries throughout the world, especially in areas with high rates of infection, God, we pray that you provide them with words of hope and equip them to love and serve those around them. In Jesus' name we pray. Amen. Okay, guys, here it is. What a Monday. Let's take a look at the S&P 500, Emini Futures. Go to a daily chart. Okay, the pandemic crisis, or the pandemic crash, started right here with the bearish cross at a price of 32.72 back on February 27th. We found a bottom on March 23rd at a price of 21.74. We rallied up to resistance. Resistance at the BBC sent us back to support at blue and climbing. Once we managed to get above the BBC, we then set our sights on higher resistance, which we had outlined and which we found, and which sent us back to the BBC, which sent us back up to resistance to the next level that we had highlighted here on the chart. This day was the outlier. This is the day where we popped up, looks an awful lot like today, and then the next 2 days, back to back, we got sent packing back down to support at the BBC. That support sent us up to resistance, where we spent 1, 2, 3 sessions until we finally closed above red and falling. In this case, red and sideways. We could not quite make it back up to this area of resistance. That sent us once again back down to support at the BBC. We've spent 1, 2, 3 sessions trapped between the BBC and what is now red and flat. We've got a bullish session under our belt. We opened last night at 6 p.m. Eastern at 28.59.75. The high of the session so far, 29.52.75. This is a parabolic type of move to the upside. Does that mean we're in the clear? Everybody's home safe? Well, I hope everybody is home and safe, or if you've been allowed to go back to work, I hope you're at work and safe. But we've still got this area of resistance overhead to deal with. We didn't make it through there last time. That is the next obstacle overhead. Once we clear that obstacle, the next obstacle will be right here. And then the really big obstacle will be the price where we had the actual bearish cross that set this whole downward move in motion. All right, let me give you the numbers from around the world. The cash markets, as they're called. The indices. Hello, Ray. And hello to everyone else. All right, we pull in some fresh data. Start here in the U.S. Currently the Dow up 810 points. NASDAQ up 217. Now for the Dow, that's a gain of almost 3.5%. The NASDAQ is up 217, 2.5%. S&P 500 up 86, 3%. And the Russell 2000 up 71 points, 5.5%. In the Asian markets, at the close, Nikkei posted a gain of 96 points, Shanghai gained 7, the Hang Seng gained 137. No movers, no shakers there. In the European markets, at the close, FTSE gained 248 points. It's a little over 4%. The DAX gained 593 points. That's 5.5%. And the CAC gained 220 points. Again, a little over 5%. That gives us a green day in Asia, a green day in the UK, and so far, it's a big green Radio Monday here in the US of A. Keep your eye on this price right here. 29.59.75. That is our most recent swing high. And this price inches its way up. No doubt we will run into some resistance there, some turbulence. Perhaps we trade through it, struggle through this area. This will be the big one, okay? But before we concern ourselves with that one or that one, we're going to stay focused right here, right now. We're currently challenging the swing high of May 11th, but it's the swing high of April 29th that has my attention as far as potential resistance overhead. We can go to Michael now and get a recap of everything that happened in the live training room this morning. Michael, are you ready? That's the sound of Michael saying I'm not ready yet. Okay. And let me do that. Do this. I'm going to drag up to the screen last night's Concierge Trade Alerts. If you want to grab a screenshot, please feel free to do so. Got them out last night at 6:25 p.m. Eastern. Beginning of the session was kind of quiet and sideways, but once it kicked into gear, and as we drill down later in the show to some smaller time frames, we'll take a look at exactly when and how that happened. Okay, you got them? Okay. All right, let's do that right now. Ray says that Michael's having some trouble with his monitors. Valerie, do you know anything about that?
I'm sorry, I was talking to my husband.
Oh, I'm sorry. Do you know if Michael's coming on?
As far as I know, yes.
Oh, okay.
Yeah, he finished off the training room. Yeah.
Oh, okay.
I'll-
They mentioned something that he had trouble this morning with his monitors.
He did, but let me text him.
I'm here.
Oh,
I'm
Oh,
here.
there he is.
Okay.
I'm,
I didn't know
I'm
if I
here.
should launch into my part or if you were going to come do the recap.
No, let me do the recap.
Okay.
But everything is backwards right now for me because I was having trouble, and when I hooked everything up, all the stuff that I normally do in the background is now being done in front of everybody, and so I'm trying to organize this, and I'll do it after I do my recap.
Did you go to the display properties and just drag your monitors around to the opposite configuration?
Well, that was the first thing I did.
Okay.
Well, it wasn't the first. The first thing I did was plug it into the right thing on the back of my computer. You know, I'm just a mess right now. See, everything that I clicked on that normally shows up on my other screen is showing up on the screen that you guys can see. Okay.
Right now, I see what I normally see.
Yeah.
But you can also go to webinar which screen you want to show.
Yeah.
So that's and you've just flipped it.
Yeah. I just had to. I mean, everything is backwards for me right now.
What happens on the day when your baby turns 16?
Yeah. Jake's 16 today.
Happy birthday.
Yeah.
And my son just turned 18.
And my daughter did.
There you go.
In January.
I'm not telling how old my kids are.
All right, I'll hit mute on my end and let you have it.
Okay. All right, Dwayne. I got it. Okay. Let me have a big breath. I still haven't taken my blood pressure pill. Okay. Here we go. Good afternoon, everybody. Today is Monday, the 18th day of May, 2020. My son's 16th birthday. All right. So I got in late this morning because I was having trouble putting everything all together. But, Val held down the house for the first 45 minutes, I think. And I have my Jamaica pen. I don't know where my regular pen is. I have that. Things are just all messed up. It doesn't matter. So today, the 18th day of May, 2020, we made 30 ticks in crude and 20 ticks in gold. So we were up $500 a contract. Today it took 75 minutes. So that's pretty much an indication of how long it took for me to get going. And one trade to get to the goal for the day, I was at $100 a contract when I did that. And we took a total of 5 trades this morning. So on the month now, we're at $4,395. That's over 12 days, averaging $366 a day. On the year, we're at $34,730. That's over 90 days, averaging $385 per contract per day. Go here. If you have not taken a free trial, I always yawn at this part. If you have not taken a free trial and you want to take a free trial, go here to the homepage at CFRN.net. It says free 5-day trial. Click on that and you'll be brought to this page, Emini Trading School.com. On this page, all we ask for is your name, your email, your phone number, and you can put in your biggest trading challenge so we can tailor one-on-one training just for you. And we really do that. We really do. Hit the send button and you'll be sent a confirmation link. Once you get that confirmation link, you must click on it. Otherwise, we don't know that you took the free trial. Okay, I'm going to get back to this again in a few minutes. All right, so in the markets today. Now, the first hour, just about, I wasn't in there. I was trying to be, but on gold, there was a short there. There was a short there. There was a short there. So right here in gold, there was an easy $300 per contract. My first trade in gold was right here. And I still don't have my glasses, but I picked up 10 ticks on that. That's where we got the goal for the day. Then over here, I picked up another 10 ticks. Now this is crude oil. What am I talking about? My charts are in the wrong place. It's messing me up totally. Okay, so on crude, the first trade. Hang on. Let me go back. Okay. On crude, the first trade, we picked up 12 ticks. And then we picked up 18 ticks. And then we had a break even. So we're at plus 30 at this point. There was a short right here that gave a little bit of profit. And then we get into the break. Yeah. So in crude oil today, there was just a bunch of opportunity if you just follow the rules. Right here was the short, and there was the short. And that's all during the break. Okay, that was crude oil. Now the euro, we didn't do anything with the euro today. It's not to say there was nothing to be done, but we didn't do anything with it. In the morning session, this is when Val was in, and there really wasn't much going on. There was a short right there, and a long right here, along there, another long there, another long there. You see, you got to look down here at the slingshot, and this is going into the break now. And the euro got killed right here, but it came right back over here, along there, along there, along there, along there. Okay, and that was it on the euro. Now I'll get to gold. See, I usually do gold first, but everything is all messed up right now. Okay, so here we go. There was a short there, a short there, short there, short there, a short there. Then it got choppy. This is gold, man. Where did I place my trades? Gold. There was so much opportunity this morning. Like this trade right here, right in here. If you look at it, 37.3 down to 33.7. There's $400 right there per contract. And then it flipped around and took it all back. But there were just a whole bunch of opportunities. If you look at the slingshot down here, you see where the green line pulls away from the cycle. When the green line pulls away from the cycle, and then you look at your price action, and there's just so much opportunity. I only traded half the morning. I placed 5 trades and I made $500 per contract. So much opportunity. All right, here is our first trade on gold. I picked up 10 ticks there. There was a trade there, a trade there, a trade there. Here, a trade there, a trade. Everywhere, trade. There was a long trade right in here. This was during the break. Okay. Now, it looks like I only marked up one of the trades that I did. But I did 2 trades, and each one was 10 ticks on gold. Anyway, that was the morning on gold. Okay. The ES we didn't touch today. Not to say that we shouldn't have, but it was a little bit of a mess. See, all through here, this is just a mess. Now, you could have shorted right there. I wouldn't, but you could have. And then it got really choppy, and I'm looking down here at the slingshot, and you see how the cycle is just rolling around in the middle like that. That's just, horrible trading, and you best to just stay away from it. And that's pretty much what I did. There was one trade opportunity here that I identified, but I said it was a weak trade. Ray, you become a partner this week, and I'll tell you what that's all about. Okay. There are other trade setups than I do in the morning session, and I'll tell you what it's all about. We'll have one-on-one. this week. Okay. So on the ES, we didn't have anything this morning. Nothing that I really liked anyway. And you know, the YVR trades, they're just knocking it out. Look at that one right there. Bang. They're just knocking it out. Anyway, back to the future. Here we go. All right. So if you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. It says free 5-day trial. Just click on that. It's going to bring you to this page, EminiTrainingSchool.com. And on this page, all we ask for is your name, your email, and your phone number. You can tell us your biggest training challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay. And the recap. Today, the 18th day of May, we made 30 ticks in crude, 20 ticks in gold, put us at plus $500 a contract. And it took 75 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 5 trades today. Okay. So on the month, we're at $4,395 a contract. That's over 12 days, averaging $366 per contract per 2-hour day. On the year, we're at $34,730 a contract. That's over 90 days, averaging $385 per contract per 2-hour days. Now, again, I'm going to say, I don't think I really need to, but I'm going to say, you know, you don't get days like this very often where, you know, I could have placed, if I just traded gold, I could have started out, well, I did start out right about here. But this is a $400 contract trade right there. I picked up 10 ticks there, got $100 a contract. But if you go all the way back to the beginning, right here, this is just incredible. There is so much opportunity. If you learn our trade setups and you stick with the rules, there is just so much opportunity right now. Okay. With that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Dwayne is ready. Go. Here we go.
Here I am.
Okay.
And here we
I see
go.
it.
All right. Recap of the recap.
Today, it took 75 minutes and 1 trade to get to the goal for the day. So far this month, let me just check. So far this month, out of 12 trading days, we got our goal for the day on the first trade. 1, 2, 3, 4, 5, 6, 7. Hang on. 1, 2. I gotta spread this out. 1, 2, 3, 4, 5, 6, 7. 7 out of 12 days this month we got our goal for the day on the first trade. And
Excellent.
yep, it's I'm telling you, these markets right now, if you're not trading, I don't know why.
Oh, the incredible thing the markets offer right now are follow through.
Yeah, follow through and volatility, and it's just
You can have sideways volatility or directional volatility, and we've been blessed for quite some time now with directional volatility.
yes.
In other
we
words,
have.
a down day is a down day, and an up day is an up day. And
Yeah. When it goes down, it's going down a lot. When it goes up, it's going up a lot. That's pretty much a way to look at that.
I spoke with Garrett, and he's going to try to join us towards the top of the hour.
Okay.
Unfortunately, guys, John is not well.
Oh no.
Yeah,
What's happened to John?
well,
He got it?
I think so.
Hmm.
Yeah, but he's a fighter, and he's on some kind of medication and protocol. So I'm not saying he officially has it. That'll be his call to say if he chooses, but he is very, very sick. So you guys please keep him in your prayers.
Absolutely.
Okay. Well, there's some political things I want to talk about. I'll wait and see if Garrett comes on. I was watching Steve Hilton's Revolution last night on Fox News, and some of the stuff that's going on out there, it's just, it's insane. Out in L.A., La La Land, and I'm just going to touch on this, and then we'll go straight to the markets. What's her official title? Hang on. Dr. Barbara Ferrer is the LA County Public Health Director. Dr. Barbara Ferrer, LA County Public Health Director. Guess what her medical specialty is?
Psychology.
Go ahead. Go ahead, guess.
Psychology.
You give up? I mean, you would at least think it was in some kind of medicine, epidemiology, maybe public health. She's a doctor of social welfare. And she's the one who has said that they need to stay shut down until August.
Social work.
The people who can earn their living in an office from a computer, as you do, as I do, as Valerie does, as many of the people in our audience do, that's one thing. And I was actually surprised at this percentage. People who can earn a living from home, from their computer, is actually 37% of the working population. I was pretty surprised that the number was as high as it is. But that does, the other percentage, it doesn't do them a bit of good that some of us can when they can't. You follow what I'm saying?
Yeah.
So.
Yeah, absolutely.
So she, and money's really not an issue for her, because as a doctor of social welfare who is in charge of all LA County health. Oh, she also has a bachelorate in community studies. Her salary is $450,000 a year. Now, I got nothing against people making lots of money.
Yeah, the problem is
she's a government employee. And she's saying the economy that pays her salary, and you got to believe with a $450,000 a year salary, there's a pretty nice little retirement check that comes along with that when she reaches retirement age. So,
and probably a husband that is also getting some kind of a check from the government. That's the way that stuff usually works.
$465,000 a year. So anyway, I won't dive too deep into that, but that's some of the stuff that we're dealing with, folks, out there in the world. People who have no real understanding of what it's like to be a man in the street, you have a 75 cents to your name and a mortgage coming due. They've probably never experienced that in their life. The fact that she was, I don't know this for certain, but the fact that she was able to go to college and earn the degree and then, get into this, I don't even think it's an elected position. I think it's an appointed position. So I'm not sure who appointed her. But, she's probably never known a day of struggle, financial struggle in her life. I'm sure she has every other kind of problem that all the rest of us deal with, you know, physical, emotional, all kinds of things. But financial fear has probably never been a part of her life. So, but she gets to call the shot. And they're out there in California on the beaches arresting people, I guess, that violate this order to shelter in place. There's some rule about you can walk on the wet sand, but you can't walk on the dry sand. Some guy got arrested the other day that was paddleboarding. I mean, it's insanity.
Yeah, it's pretty crazy. You know, this weekend, well, the last, you know, since Wednesday, I've been on spring break. It seems like, you know, I did my work, but
Yes, you did.
but the rest of the time, you know, I'm with all these people, you know, multi-million-dollar homes and gated communities, and Mark, whose house we were staying at, you know, there were 5 couples and 14 kids, and and you know, we had one of the houses is $2.5 million house. He's just about done building, but it's on the water, and Jake was out there, you know, paddleboarding while all the kids were, and Freddie, who's about 12 years old, was giving everybody boat rides and scenic tours, and and I mean, it's just crazy. But Mark and Fred started a business. They have this stuff, you know, because Fred's a doctor. Well, he's a plastic surgeon, and they have this stuff that they spray that will kill the coronavirus if it's existing on any surface. And you know, so I went with them.
A can of Lysol on the back, if you read the fine print, says kills coronavirus.
Does it really?
It's what it says.
Well, I don't know. They got this thing, and I mean, they actually have a contract to do 21 schools.
Wow.
And you know, and I don't think they'd ever even tried it. And they still got a contract. It's the people you know, right?
Boy, is that yeah. Well, you know.
And
go ahead.
Yeah, okay. That's enough. Let's jump into the charts.
This is a 30-minute chart, guys, of the S&P 500 Emini Futures. Now, today being the 18th, let's scrunch this up a little bit and go back here and have a look at the Globex open last night. Right there, that little red candle. That was the Globex open. Now the alerts, Concierge Trade Alerts, if you didn't get a screenshot before, and remember, the best way to do it, use the snipping tool that is built into Windows 10, and you just hold down your left, get your cursor right here, hold down the left mouse button, drag it, release the left mouse button, right click that image, you can send it, you can copy it, you can save it as a JPEG, etc. That's the simplest way I know, and I always keep the snipping tool parked right down on my taskbar, so I never have to go looking for it. It's always there waiting. So last night I got the alerts out, the CTAs at 6:25. I put out logic alerts first, then I put out the CTAs. On the S&P, consider being long 2869. That's going to be right about here. Now, because we had such a directional move, most days we see the alerts tested multiple times, over and over, sometimes twice, sometimes 3 times, sometimes 5 times. So there's 2869. And we actually did see some of that. 28.69. Now you're looking at last week's weekly trading zones. I give them to the entire audience every Thursday, but partners get the new zones every Monday morning, 6:15 a.m. Eastern. And I always encourage you to make note of last week's zones if you're part of the audience, if you're not yet a CFRN member, because as you can see right here, they still come into play. Sunday night, last week's zones will still be in play. They were last night, they will be today. You know, as we move into the Globex session tonight, into tomorrow, you'll see the new weekly zones start to strengthen and take hold. The way last week's zones are still holding price back here at the swing high of the day. So from 28.69, well, let's do it. Alexa, 29.47 minus 28.69.
2,947 minus 2,869, 78.
Alexa, 78 times 50.
78 times 50 is 3,900.
$78-point move. $3,900 per contract traded. Well, that's if you stayed in all the way to the very top. These are unprecedented times. And as Michael mentioned earlier, you'll want to be taking advantage of this opportunity. But that doesn't mean you just dive in and start trading and throwing money at the market. That's the absolute worst thing you could do. But there's certainly no better learning environment than what we have at hand right now. So whether you already have experience, you've already put together your 10 consecutive days in a row, or you're just getting started with us, I can't stress enough the importance of doing exactly that. When you start with us, you put together 10 consecutive days in a row where you reach your goal. Then the blueprint gives you the green light to go live with one contract. The goal then is to increase your account balance by $2,000. The blueprint then gives you the green light to add your second contract, which you are adding with profit you earned in the market. As with number 3 and number 4 and number 5, as the blueprint gives you the green light all along the way, you're always adding the next contract with profit you earned in the market. If you don't have profit, then you're not adding another contract. Now, when I say earn the right to trade 10 contracts, that doesn't mean that you made a lot of money from some other business, some other industry, you sold it, you got a bunch of money in the bank, so you can, quote unquote, afford to trade 10 contracts coming out of the gate. I promise you that is the worst possible thing that anyone could do. If you don't take this thing step by step, this thing will eat your lunch and your dinner and your breakfast. But it doesn't have to be that way. If you can exercise patience and discipline and just follow the rules, the time-tested rules. Michael and I have been working 15 years to put together this very simple methodology for trading the markets. You're never at a loss as to what to do next. You never look at a chart and go, should I be long or should I be short? There's never a question. You always know. And you always know when you should not be in the market. This parabolic move here, chasing it up, the temptation, I know for many, was great. And no doubt, there's people that jumped in right here and got stopped out, and people who jumped in right here and got stopped out. I could go on, but you get the idea. You never chase a runaway market, because the minute you climb on board, and you know this is true because you've experienced it, it's going to the moon, but the second you climb aboard, it changes its mind, heads back to earth. Now, doesn't it? You can't change that, but you can change you. You can change how you behave. You can change how you approach the market. Now, here's how this works. Being long at 28.69, the trade to target was 28.97. So as I said, you know, if anyone held out all the way up here to this swing high, that bell's for you. But let me talk to the rest of you, the ordinary folk. Okay, you got a weekly trading zone overhead at 28.97. The weekly trading zone overhead is always the trade to target on a long trade. On a short trade, the weekly trading zone below is always the trade to target. Okay, so let's do the math again. Alexa, 28.97 minus 28.69.
2,897 minus 2,869 is 28.
Alexa, 28 times 50. Alexa, 28 times 50.
28 times 50 is 1,400.
Okay, so if you entered at the published alert price and exited at the trade to target, that was $1,400 per contract that the market made available. Now understand, we're like the usher at the movie theater of days gone by. Remember the guy, if he got there after the movie started, he had the funny little hat, he had a flashlight, and he would come in and shine the light at the floor and help you get to a seat without falling or tripping. We're the guy with the flashlight. Okay? We don't do the heavy lifting. We didn't move this market up. The market did the heavy lifting. But we shined the light here, and we shined it here. Now, if you've been with us a while, and you've earned the right to trade 10 contracts, that's a $14,000 move. That's what a lot of people in America earn. Oh, 14,000. Let's see. I'm going to guess. I think the average wage, we looked it up some time back here on the show. Let's call it 50 grand. Okay, that's a pretty good chunk of that. So the potential here is absolutely incredible. But keep in mind, if it were easy, everybody would do it, right? Everybody would be a trader. It's not easy. Well, why isn't it easy? I'm looking at your chart, it looks easy to me. Well, the methodology that we've developed over the last 15 years, the simplicity involved, that is simple, but not easy. Reason it's not easy is because of all the noise going on between your ears. That is where you and I will spend most of our time when we do one-on-one mentoring sessions, because when you become a CFRN trader, you have unlimited access to one-on-one mentoring. And when we get together, of course, you'll have questions about some trades and how should I have read this and what should I have seen here. But in most cases, we'll spend the majority of our time talking about what you were thinking about when you saw what you were trying to trade. Now, I shied away from the whole psychology part of trading in the beginning. It's just a bunch of mumbo jumbo. Until I finally, in an act of desperation, did what people have been telling me to do for years, Michael here being one of those. Dude, go read Trading in the Zone. I finally broke down. I got the book. I read it cover to cover on a Saturday. I was so changed by that book. I purposed it in my heart to meet the author. He has since passed, but the last couple of years of his life, he and I were pretty good friends. Spent a lot of time on the phone together. He lived not too far from me out in Scottsdale. He was one of the good guys. And what I took from that book kind of changed everything for me. If you go to audible.com/CFRN, you can grab a free audiobook. Now, some people go, what, a trading book? Audiobook? That doesn't even make sense. How are you going to get the charts and the graphs and the indicators and the oscillators? There are none. No charts, no graphs, no indicators, no oscillators. Well, how's that even a trading book? Trust me, you need to listen to that book, especially Chapter 7. All right, let's shuffle along. Here's the Dow. Last night's alert was to be long. 23,720. Alexa, ready to do some math?
I don't know that.
Alexa, 24,450 minus 23,720.
400 plus 50 equals 24,450.
Alexa, 24,450 minus
The
23,720.
answer to your calculation is 2,450.
All right, I'm not going to let you get my goat because it's a Monday. I'll just do it myself. She has her Mondays too. All right, looks like 730 points.
I had a Monday
$5 a
too.
point. That'd be $3,650 per contract traded. That's if you held out all the way to the tippy top. But chances are you didn't. The initial or the final trade to target, based upon the alerts, the way I put them out, it's the weekly trading zone overhead. And on Sunday nights, we're still working off of the previous. Ray, the name of the book again is Trading in the Zone. Now, when you go to audible.com/CFRN, you'll search for Trading in the Zone. There's 2 books by that name. I didn't think that was possible, but it is. And trust me, you don't want the other one. You want the one written by Mark Douglas. And after talking to you, Ray, you got a lot on the ball. That book, it'll be a game changer for you as well. It is for anybody. If you read it and you don't feel changed, then read it again. I've probably read it, I don't know, 10 times or more. Chapter 7. At one point, I almost had it memorized. It became a part of how I think. It became a part of how I see the markets. And what I see and how I think leads to the actions that I take. You're very welcome. Okay, so let's go to the zone 24020 minus 23720. That's 300 points. At $5 a point, that's $1,500 per contract traded. That's if you just got out right here. Now, most of you know, who've been here any length of time, that when price is on the left side of blue and climbing, especially on a strong bull candle like this, even though you've reached that trade to target, there's just really no reason to get out of the trade. I mean, you could certainly move up your stop, tighten it up, trail behind, maybe, this low or something. And you can certainly take your profit there because it's your business. As a discretionary trader, you get to make those decisions. But I'm just telling you now, when price is this separated from blue and climbing, and this step line is on the left side, the market is showing no sign of weakness. Now, right here, the market started to walk sideways, but then it corrected itself. And when it hit this zone overhead, see how it started to walk sideways? See how we go from these big candles, these little small body candles? This step line is now on the right side of blue and climbing. If we get a red candle that closes below the step line, that will be the exit signal. So there are some traders who very well may have stayed the course, because once you got to this juncture where you would typically take profit, you saw the strength in the market and you said, I waited on this trade, I've managed it, I'm not going to jump out of a perfectly good trade. Well, the market may be about to show you that this move has run out of steam, and if it does, take your leave. Okay? Let's go to the Russell. Last night on the Russell, we said to consider being long at 1260, which is right here. And the very first candle punched right through this zone, so our trade 2 target would be 1300. That's a 40-point move at $50 a point. That's $2,000 per contract traded. Does Garrett come in with a hot mic, or do we have to open his mic? Let me check and see if he's here yet. Checking. I don't see him yet. Okay. So we'll be patient and wait for him. All right. So, of course, the Russell continued on much further, ran all the way up so far to 1331. This is what an exit signal looks like right here on the Russell. See how the step line went from the left side to the right side. Price walked sideways. On this candle, the step line had not crossed over yet. But now the step line has crossed over. So this red candle that closed right below that step line, that price, 1322, that is the exit price for the Russell, 1322.2. Next, we'll go to the NQ. And last night's alert, consider being long, 91.55. Let's open this up. And 155. All right. See, from 55 to 85, well, that would be 30 points. And the trade 2 target was 87. So just 55 to 85, that's 30 at $20 a point. That's $600 per contract traded. If you've earned the right to trade 10 contracts, it's a $6,000 move. But for one contract, a $600 move, and I have no one under my roof that would complain about a $600 move. The market has been so bullish, you've noticed on each of these, price has not even been able to pull back to the BBC. Price always reverts to the mean. There's not a lot of always in trading. There's not a lot of absolutes. But I absolutely, positively promise you, price always reverts to the mean. In our case, the mean is green. We call it the BBC. It's the bull-bear cross. The price is above it, we're bullish. We're looking for higher prices. The price is below it, we're bearish. We're looking for lower prices. Fred says, Dwayne got it late today. If you've already done GC, can you briefly show it again, please? No, I haven't done it yet, Fred, but I will here in a moment. Tim, has the ES printed an exit? Please explain the difference between the Russell and the ES. Okay. All right, so we're good on the NQ. The NQ, we can see, went all the way to 93.21. That's almost 200 points. At $20 a point, it's about a $4,000 per contract move. 10 contracts would be 40 grand. Okay, here's the Russell. Here's the exit signal. Right here, Tim, price did not close. I mean, it closed below the step line, but the step line had not crossed to the right side of blue and climbing yet. Here, the step line's clearly on the right side of blue and climbing, and that candle closed below it. And on the ES, now the ES, okay, there were exit signals early along the way, but if you were waiting for the trade to target, once we hit the trade to target here, and if you said, okay, I know this is the trade to target, but I have a strong bullish market, price is on the left side of blue and climbing, step line is at the open of this candle, it was making a right, but I mean, you see what happened. When you've got this much separation between price and blue and climbing, price eventually is going to get drawn over, made it a little bit higher, and let's see, did that red candle close below the step line? Let me take a up close look. Yeah, I guess it did. So exit signal for the S&P would have been 29.45. Does that answer that, Tim? Okay, perfect. And your question mark, when the step line gets on the right side of blue and climbing, I'm not necessarily calling that bearish. What I'm saying is it's the market telling us that this move is starting to run out of steam. When price starts to walk sideways, and when this step line goes from the left side to the right side. Now, could buyers come in? You know, they've had a little rest for the last couple of hours. Could they come in with renewed strength and still push this thing higher? Absolutely. Some people may be waiting for a counter trend trade opportunity. People who understand that price always reverts to the mean. I don't put the counter trend trades in the alert channel. I used to highlight them in the discussion group just so you would understand them. But then I found out that some people were actually trading them, and a counter trend trade simply does not have the same high probability nature as a trend trade. So I said I was going to stop showing you the counter trend trades in the discussion group because I don't want anybody to get hurt. I only want to put in that alert channel that which I feel is the absolute highest probability, lowest risk opportunities. So does that mean this is like a bad trade setup? No, it's a perfectly legitimate setup. Some traders, that's their specialty, counter trend trading, waiting to trade the pullback. But you see, that pullback doesn't always make it to the BBC. Like here, price, you know, maybe you saw a counter trend opportunity here, so you got short. Price was trying to pull back to the BBC. It was trying to revert to the mean, but the bullish pressure in the market would not stand for it and just kept driving it higher. Okay. So I think I answered everybody's questions except yours, Fred. You asked about gold. We'll go to gold right now. Okay. All right. And let's see. Last night's open was right here. There we go. That green candle right there. And the Concierge Trade Alert for gold. Long 1767. This is about right here. Okay, 1767. And the flip side of the alert was to be short 1747, which is right here. Okay. So 1747. All right. Now from 1767 we put in a swing high at 75. So that's an $800 per contract move. $800 per contract move. Gold pays $100 a point. Price then got back below the trigger, and this time it made a swing high at 74. So that's a $700 move. And then price got back below the trigger, and this time it made a $900 move. Then price got below the short trigger, 1747, took us down to 1741.70. We'll just call it, we'll be conservative and call it 1742. That's a $500 move. Price got back above the trigger, dropped again. This time it dropped to 1737. So that's 10 points. That's a $1,000 per contract move. Then we got back to the trigger, and this time we dropped to 1730. That's a $1,700 per contract move. So Fred, did you have a specific question on gold? I mean, that's just my kind of standard recap, but if you have any other specific questions there, I'll be happy to answer them. Just give me a yes or no in the chat box. Let me jingle Garrett's phone and see if he's still coming. Now keep in mind, Fred, those are last week's weekly trading zones. Partners got the new trading zones this morning at 6:15 a.m. Eastern. Okay, he must be on the phone. All right. Now, that covers, oh, we haven't done crude yet. And crude, oh my goodness. If you took the crude trade last night, giddy up. All right. Here's the opening candle on crude, that big green boy. Hey, Garrett, still coming on?
Hey, yeah, wait, I am coming on, and I'm just, I'm looking for the invite now, and I'll be on shortly.
Okay, buddy, we'll talk to you then.
Thank you.
Okay. Yeah, Garrett's still coming. Okay, so on crude, the alert was, consider being long 30.35, 30.35 was right there. A $1 move in crude is worth $1,000 per contract traded. From 30.35 to 31.35 is $1,000. 32.35 $32.35, that's a $2,000 per contract move. As Michael said, if you're a trader, if you already know how to trade, you just need some help with a definable edge, be ashamed to miss the opportunity that is here. If you don't know how to trade yet, it would also be a shame to see you jump into the markets and just start throwing money at it, because you might remember, if you're old enough, back in the late 1990s, you could literally throw money at any stock that had the word tech or something of that nature in it and almost always make money, right? So then how come so many people went broke, lost their homes? Because of that noise between their ears. And they didn't really know what they were doing. Mark, your question, how many contracts for trade? I'm not sure what your question is. If you're a CFRN member, you start out in SIM. You put 10 consecutive days together in a row. 10 consecutive days in a row in SIM where you reach your goal. Then you go live with one contract. Then you increase your account balance by $2,000. Then the blueprint gives you the green light to add a second contract. You'll trade for a period of time with 2, and then the blueprint will tell you it's time to add number 3. You'll trade with 3 for a while. You'll get acclimated to that environment, and then the blueprint will tell you when it's time to add number 4. It's called the 2420 blueprint. Mark, to make $1,000 for a dollar move. Oh, how many? Oh, in crude, a $1 move from $30.35 to $31.35. That's $1,000 per contract move. Crude has actually gone up more than $2 today. So it ran up more than $2,000 per contract. Price has also pulled back to the BBC. Price always reverts to the mean. And so, a high probability trade set up from right here. I would like to see more green in this candle, but between here and red and falling, looks pretty good. I'm not going to put out an official alert at the moment because I'm focused on the radio show, and I like to be able to focus on whatever I'm doing. So, and Tim, according to your comment, no, that was Garrett on my cell phone. I was checking with him to see if he was still coming on. So he hasn't actually come on yet. So hopefully his audio will be better than that when he gets here. Okay. All right. So I think all the questions in the chat box are answered. Now, you see here, see why we don't just jump on something the second it pulls back to the BBC? This was a huge red candle. Buyers came in, drove it back up. It's been very tempting for somebody to just get long, right? But let's let the market show us that it means business. Let's let the market show us. Again, I'd like to see a green candle build, get up above these lows. And this swing high now, where we ran into trouble, look where it is. Right where you'd expect to find resistance. I want to get over that hump, and if there's not enough distance between that spot and red and falling, I'll pass. My entry will then be above red and falling with a target somewhere near that swing high. And that's how I trade every market, every time, every day, in every way. I'm a one-trick pony. Sorry. I know a lot of the websites you visit, they razzle and dazzle you. They got 98% win ratios and all kinds of stuff. And, well, some people lie. But anyway, we won't call any names. We just tell you the truth. We're very transparent. We show you the good days, the bad days, the ugly days. That's the truth about trading. And that's what you need. You need someone to stop pulling your leg, painting the sky blue when it's not. Now, I know Valerie sent me a recap, as she always does. So let me share the recap of the logic alerts with you. Now, what I just showed you, those were the Concierge Trade Alerts. Well, what's the difference? I'll tell you. Concierge Trade Alerts are based on previous or historic price action. What I'm about to show you, the logic alerts, are based on current price action. Quite often, more often than not, you'll find a Concierge Trade Alert that sort of lines up with a logic alert. In other words, historical price action lining up with current price action. That sounds kind of good, right? It is. Now, so far this week, we've only issued 6 alerts. It dawned on me the other day when we had to do some recapping here on the show live. I've been just grinding out these alerts because the markets have been so active. I'd really forgotten what hard work that recap really was. I'm going to ease up on Valerie a little bit. I mean, I pumped out, I think, 78 alerts last week. We'll take a look at it in just a second. But so far this week, I recap one by one the concierge here on the show. She recaps the logic in the channel. 6 alerts, nothing has stopped out. Now, we average 20% a week getting stopped out. Okay? So, just because we have nothing stopped out this week, don't get carried away with that. And let me show you what the alerts were last night. And there'll be more today. Okay. Now, last week, week 93, we had a total of 75 alerts. 76. 7 never triggered. They gave us 69 actionable alerts. 3 stopped out. That's 4% of actionable alerts stopped out. Now, that's on top. That's just the logic. But every day I came on the show last week and I did the recap of the concierge trade alerts. So, all told, I guess there had to have been 150 alerts total, maybe, whatever the math is. But this is what happened last week. There were 3 stop outs. We don't want to risk more than $300 per contract, per trade on any of the alerts. Okay? We had a great week last week, but again, that's not a typical week. It's like those weight loss commercials where, you got the picture, the before and after pictures, and in tiny print at the bottom, it says not typical results. Well, I'm not saying this in tiny print. I'm screaming at you. Not typical results. Typical results are about 20% a week get stopped out. So last night on Logic, the alert was to be long 2868 to 2870 to 2874 to 2897. Alexa, 2897 minus 2868.
2,897 minus 2,868 is 29.
Alexa, 29 times 50.
29 times 50 is 1,450.
If you entered here
I didn't catch that.
and
Please say that
exited
again.
here, it was a $1,450 per contract trade. On crude, we were above last week's weekly trading zones. So I didn't have a final trade to target to give you because I had not yet done this week's zones. So from 30.25 to 30.45, it's $200 per contract. On the Dow, 23,660 to 23,695. On the Russell, 1260 to 1262 to 1263. Crude, 1767 to 1768. NQ, 91.55 to 65 to 75 to 87. It's 30 points, $20 a point, $600 per contract traded. So as a member of CFRN, you have access to the Concierge Trade Alerts. There's Garrett. Hey, let me open your mic. Garrett, it says you're muted on your end, so I need you to unmute yourself, please, sir. There we go, Garrett. Welcome to the show.
There we go. I was trying to do it, but didn't work on my end.
No, brother, glad to hear your voice. Glad to have you with us.
Yeah, same. Nice to be back.
Did you happen to watch Steve Hilton last night? Revolution. I don't know if you watched.
I didn't.
Yet, I talked about this at the beginning of the show, but I was holding out to see if you were going to come talk with me about it, or if John was going to talk with me about it. But there's a lady out there, Dr. Barbara Ferrer, in Los Angeles, and her official title is the LA County Public Health Director. Now, guess what Dr. Barbara Ferrer, guess what her doctorate is in? She's the LA County Public Health Director.
I think it's in art.
Social welfare.
Social welfare. Oh, well, that's...
and she's the one who's called for the economy to stay closed down until August.
I'm just looking at her now. I'm looking at the picture, and she looks... yeah, she looks... I can't remember the name of the gal in the Democrat Party who was there. She certainly... yeah, I mean, she certainly looks like she's one that would want to close down the economy and definitely be socialism and, you know...
her doctorate is in social welfare, but she does have hang on. She also has a BA in community studies. A doctor of social welfare with a BA in community studies.
Yeah, can you spell anarchist?
Guess what she's knocking down a year. Now, I got nothing against people making lots of money, but this isn't an elected official. This is an appointed official. Just take a stab at what she makes a year. Working for for LA County.
Yeah, I don't want to.
$465,000 a year.
Unbelievable. Knows nothing about public health, of course.
No, nothing.
And she's got two majors, neither of which are majors.
Yeah.
I mean, really.
Right.
I mean, what is a major in social welfare? What do you need to know?
I don't know. I mean, I've gone out before and provided food, and clothing for the homeless or something. I mean, I don't know. I mean, to me, that's what social welfare is. That's helping people.
Yeah,
and what's below the poverty line and need help, and so you go help them.
Yeah, exactly. It doesn't take rocket science. And her other major, this is, maybe this is where we can finally look and see what went wrong, and yet a lot of people don't realize that anything's gone wrong. somehow. So
Steve had an idea. Steve said, how about no federal money for any state unless every public official who keeps the shutdown going agrees to have their pay stopped and given to local food banks for the duration of the shutdown, and they can apply for unemployment along with the rest of their victims. It's called having skin in the game.
well, of course, none of these people have any skin in the game, and that's their whole deal. I mean, there's this stuff that I've been talking about this, actually in my case for decades, and of course it still falls on deaf ears. And I'm wondering, it's like, gee, what is it going to take for people to actually wake up? Although, on a positive note, I think a lot of people are waking up. But when you're getting, I was telling somebody over the weekend, I said, listen, brainwashing everybody thinks is a colloquialism. I said, it's not. I said, Aldous Huxley told you back in 1962 that was going to happen and was happening. And of course it has happened. And I said, has the school system changed from 50 years ago? Of course it has. Oh, it's become progressive. I said, really? I said, how's that working for you? Yeah, I said, how's that? I said, progressive. In my mind, I would think, well, gee, progressive is probably a good thing. And oh, by the way, liberal is probably a good thing. Heck, I'm liberal. I don't want to tell anybody else what to do. I said, don't break the law. But apart from that, I don't really care what you do.
Right.
As long as you don't bother me and you don't bother other people.
Free love generation, you and I.
Yeah, it's none of my business. So I said, when I get into a conversation with what they call liberals today, I said, you're not the liberal. I'm the liberal. I said, I'm not trying to dictate your life. You are trying to dictate mine. So we're turned upside down. And I believe we are fighting for our freedom. I mean, Bernie Sanders will tell you that we're entitled to this, we're entitled to that, we're entitled to freedom, we're not entitled to anything. We're alive. We're like anything else that's alive on this planet. You need to survive and fend for yourself.
You're entitled to fight to survive on this planet. Period.
Exactly. Bingo. And to the degree that you can figure that out and make that work for you, that's wonderful. And to the degree that once you get that done, that you can help other people, that's even better.
And that's why villages and communities and cities and that's why people come together. Because there's strength in numbers and we can help one another.
Well, you notice, the funny thing is that you mentioned that you come together and the Beatles song and all that is what it's all about. First of all, we can't be apart anyhow. On a bigger spiritual basis, we are all together.
That's right.
But the problem is we don't know that, and there are certain forces. These forces that all these liberal people are trying to do, and they say, gee, we're wonderful, great people, this and that. And I said, really? I said, how come you're driving blacks against whites, whites against blacks, rich against poor, man against woman, everybody against the white man? How come we're in favor of doing that? If we're so good, shouldn't we? And that's, of course, divide and conquer. Mm-hmm. The guys that are the globalists who are behind all this, trying to take everything over. And in my view, I believe
Steve
the
used a term
takeover
last
happened.
night called technocrats. Are you familiar with that term?
I am. Yeah.
What exactly does that mean?
I think what it really means is that if you think of American history and you think of the robber barons, you think of J.P. Morgan and Rockefeller and Carnegie and all those people back at the time. The current robber barons are your Bill Gateses and your Jeff Bezos and the Republicans, the party of the rich. I said, really? How come all the rich people are Democrats then? I said seriously. I said, start naming rich people. I don't care who you name. Rothschild, Rockefeller. They don't need politics, by the way. They're above that. They own the politicians. That's just a silly game for us to play and for them to control us. But of those that still linger around and play the game, well, you got your Soros and your Jeff Bezos and your Warren Buffett and your, I mean, just name them, Bill Gates, on and on and on and on, and everybody's a Democrat. So I don't know how the Republicans are the party of the rich. It's people are being fooled, and all they're doing about it is saying, "Thank you, may I have another?" Lie to me, thank you. It's please keep lying to me, and may I have another? And as long as that happens,
And when you start paying people more money to stay at home than they made when they went to work, where does is it their fault that their incentive to thrive and survive gets sucked out of them?
we are rewarding stupid right now. Okay, I mean, let's go back to 2008 when they did the QE and stuff like that. Who got penalized? Well, if you were smart and you made your payments and you didn't get out of line and you didn't owe anybody any money, well, then you were penalized, because if you had big debt on your credit card, they just forgave it. They'd forgive 90% of. Sometimes they'd forgive the whole thing. But if you didn't do that, what did you get? Nothing. Well, they got everything that they bought, and then they didn't have to pay for it. Then they go in and do the house. Now, granted, a lot of people lost their homes. But they were talking about...
And that's a horrible thing.
That's a horrible thing. And remember what happened. If you go back to the late 70s when they did that credit card thing, my dog Wrigley could have got a credit card. That's not a joke. I mean, literally, I could have put one in. He wasn't alive then, but I could have put one in and he would have gotten the card.
Yep.
People did that. Remember what happened in 2008? Anybody can buy, 2007, 2006, anybody can buy a house. And some of these people...
The guy bagging groceries at Safeway could qualify for a $500,000 home. It didn't take a mathematician to figure out that this isn't going to work.
But you see the plan when you really want to figure out. First of all, the question would come up to any logical person's mind is, who the heck is doing this? What kind of idiot is allowing this to happen? And I say, if you think logically, you're not going to get the answer to this. What you need to think of is New World Order. What got my attention in 1972 when Henry Kissinger said it, first time I heard it. But for some reason, it set off something in my mind. I wanted to know what that was. And so I studied for a long time to find out what that was. And but if you think from that perspective, it makes a great deal of sense. Give the credit cards out there and then wipe them out. And oh, by the way, what was the deal on the credit cards? And so forth. What they wanted to do is give a credit card to everybody, and then when interest rates went up in 1981, they were up over 20%, up at a 20% area. What the bankers went to the politicians and said was, they said, remove the usury laws. Usury was anything over 10% usury. And they said, well, why would you want to do that? And they said, well, the interest rates are high. We want to pay higher interest rate to our depositors. And I'm going, really? Is that really what you want to do? I said, look at the world today. Are they paying high interest rates now? No. How can the bank pay you nothing on $1 million in a deposit in your banking account and charge you 30% on your credit card? I mean, some people are paying 30% on their credit cards.
Mm-hmm. Right.
How do you pay nothing and charge 30%? I said, interest rates should be the value of money, right? I mean, isn't that what an interest rate is? An interest rate is kind of what money's worth in the mind of whoever's bargaining for money, right? In other words, you put money in my bank, I'll pay you this, or you want a loan, how much do I have to pay? That's what it's all about. So if they're not willing to pay you, I mean, my thought is bankers will tell you what money's worth. What are they paying you in your account? Well, I'm getting pretty much next to nothing. I said, well, I guess that's what it's worth. So I said, I'd like to take a loan, and I'd like to pay, pretty much next to nothing. I'll pay 10 basis points above next to nothing. How about that? Go try to pull that off sometime. It doesn't work that way. But what they did is that what they wanted to do was raise interest rates way back then with the credit card deal. And why? Not to pay more money into the bank account, but they wanted to be able to charge more money on this new business that they had called credit cards. You know, and that's what they
is that
did.
when credit cards first hit the open market? Was that the 70s?
So somewhere back there,
Okay.
yeah. But that's that's when they really got out. Like computers were invented, what, in the 50s or 60s or something, and we didn't see them till the 90s or
Yeah.
they had certain type of things. So, but when credit cards really got out there, what they wanted to do was charge these horrendous rates on credit cards, and of course that's what they were able to do. Hang on just a second.
Yeah, go ahead. If you need to take the call, go ahead. I just highlighted up on the screen, guys. Again, the weekly trading zones go out to our members Monday morning, 6:15 a.m. Eastern.
I'm sorry.
Go
Anyway,
ahead.
but the point is that thing with the interest rates was about getting credit cards to be able to charge over 10%. And of course, they went up to 30. I knew somebody was paying 36%. Unbelievable.
Oh my goodness.
Well, you remember interest rates were up to, they broke the 20% barrier there back in.
Didn't mortgages go as high as 18% one time?
Yeah. I had an 18% second at one point.
My goodness.
But that was 1981. November 81 was the peak. Interest rates hit 20% earlier, and then they lagged and moved high later. Bonds got down to 55 in November of 81. Pretty neat deal. You could buy bonds at 55, meaning you pay $550 for a bond that matures at $1,000, and they pay you 18% while you wait. What a deal. And by the way, if you wait till maturity, your investment doubles and you get 18% while you wait. Now that means, hey, that makes bonds pretty attractive, right?
Man, you're not kidding.
Yeah, give me 18% and I'll just hold them to maturity, making 18% the whole time, and then I'll double my money when I get to the other end. It's like, well, that's good. I said, what are they doing now? Well, now you're paying 50% more than they're going to mature at, and they're paying you nothing for the privilege of losing a third of your money.
And
It's
they
like,
wonder why nobody shows up at the auction.
Yeah, well, it's unbelievable. But
Now,
again,
when
the other thing I was going to say, by the way, too. So what did they do then? They set up the situation. They made a bunch of people go bankrupt who were getting all these credit cards and maxing them out. Oh boy, I got a credit card. I can just buy whatever I want.
Oh, you know what? When I was young, I remember every time I would get a thing in the mail that would say that like my credit limit on a certain card had been increased by $5,000 or something. Because nobody ever taught me about these things as a kid growing up and in school. I'd be dancing around the house like I had hit the lottery or got a pay raise or something. It was
And you weren't alone.
Insanity.
And so did everybody else at that time. A lot of people at that time did that. And then fast forward to 2005, 6, 7, all of a sudden anybody can get a house. And I remember people in Florida, they were talking about a racial thing. Well, the certain black people, whatever, weren't able to get a house, and this wasn't fair. They weren't able to take advantage of them, so they go in and fight for this thing. Now they give them the houses.
What was that group?
And then what happens?
Acorn was the group that fought to get the bar lowered for lending. And I'm not saying they're the only ones, but weren't they one of the major organizations that lobbied for that?
I don't know, but I believe they were. I remember that. And the problem is, did it do black people any favors? No. It allowed them to go into a situation, buy a home, feel very great about it, and feel good about it for a while. Then it'd have it ripped out from underneath them, and have to go pay rent that was twice what they were paying before when they couldn't get a home.
Yep.
That's all it did for them. And meanwhile, what did it do? It took a whole bunch of, I remember a few years after that. I think the low was around 2012, 11, 12, somewhere in there, where there was massive amounts of homes in foreclosure and empty homes.
Oh my goodness! Everywhere
people
you look,
walked
you drive
away
down
from
the
it.
street, one sign after another. Yeah, I remember.
Exactly. And all of a sudden, remember this, Dwayne? All of a sudden, there were no houses around. Remember that? I couldn't believe it. I said, we go from houses all over the place. You could just go squat and live in a house. I mean, for somebody who wanted to do that, and take your pick. They're all over the place.
Yeah.
Every neighborhood, it seemed like. And all of a sudden, they're all gone. I remember that, and I go, what the heck happened? And what happened is they packaged these up with a whole bunch of, and who did it go to? How did they get rid of these houses? Well, nobody was buying them at the banks. The banks couldn't give them away. There were too many of them. So all of a sudden, somebody had the great idea, one of those people at the top, that, well, gee, here's what we'll do. We'll put a big package together. We'll get a government guarantee so you can't lose money, and we'll buy them for 10 cents on the dollar. Well, heck, these are nice homes. These are homes. I don't care what house you buy. I don't care whether the house is nice or not. If you buy it for 10 cents on a dollar, you probably got yourself a pretty good deal there.
I can look up at the mountain right now, and I can see homes that I walked through that were on the market for $1 million plus, and then I saw them sell for $400,000. True story.
Oh yeah, and the ones that didn't, that got foreclosed on, they got picked up by people like, Warren Buffett and Bill Gates and all these guys, and then all the hedge fund guys, and they just took them all off the market. So all they did was the same thing they did before. They did the thing with credit cards. What did they do? They made a whole bunch of people go broke. People had suicides. People lost their father or their mother, or families broke up. But they don't care about that. Those are just people. Those are they're what they call the useless eaters. Some useless eaters died. What do we care? Doesn't matter. So, by the way, after we got their money that way, now they've grown up. Let's get them into a house, and then we'll take their homes. And so they did that. And now let's come 15 years later, whatever it is, 12 years later. Well, why don't we just take their businesses? So we took their money, we made them bankrupt. Then later on, when they came back, we took their homes. Now we're taking their businesses. I said, how much does it take? Oh, but let's keep them fighting. Let's make it black against white and mix them up with a bunch of lies and have them hate each other. And then they'll fight amongst themselves, and we'll just rob them blind. They're so stupid. They're letting us do it. Why don't we just take whatever we can take? We got their homes. We got their businesses. We got their money. What else can we take? And that's what's going on. It's pretty simple.
Really
and by the way,
you make such a clear case. What you just said, I think anybody could understand. And I think a lot of jaws just dropped and said, wow.
This is exactly what's happened. And oh, by the way, if you're thinking Republican and Democrat, that'll put a real big smile on their face, because they don't care which one you are. Just get involved in that battle between Republican and Democrat and argue whatever the silly Republicans and Democrats are arguing about. And while you're doing it, we're just going to continue to fleece you. Pretty soon, let me tell you the next thing they're going to take. They got your money. They got your house. They got your business.
Well, they got you locked up in your house right now, so they've taken your freedom too.
Yeah, well, but that's coming. They've got your children, because they've already changed their thinking in school, because they changed the school system a long time ago. So they got your money, they got your house, they got your business, they got your children. What else is left to take? Well, I've only got my freedom. I'm sorry. The reality is, let's be real here. When did we lose our freedom? I think that left about 4 presidents before. I think they already. In other words, how could they get all this stuff done if they weren't in control anyhow, right? In other words, if they weren't in control, this wouldn't happen. We'd have people that would have stopped. This wouldn't have happened in the early 60s, because both Republicans and Democrats were conservative. People believed in God. People knew what the golden rule was. People didn't like liars.
Courtrooms
and
had
if
the Ten
somebody-
Commandments
and-
up on the wall.
Yeah, and if people, if you had a politician, and maybe a whole bunch of them lied then too, and I was just naive, but they certainly didn't do it to the degree that they are getting away with now. But once they were discovered, it didn't matter. If it was somebody in your party and they lied, you wanted to get rid of them right away. They were an embarrassment, and they were a crook, and we don't like them anymore. Nowadays, if it's your party, then you gotta kind of fight for those people, right? In other words, they can do whatever. Just think of some of the horrible things that all sorts of politicians we can name have done. But if they're in your party, it's like, oh, it's okay. Well, that's all right.
Yeah, that's right.
Oh, if the other party did it, we'd have it all over the news for the next 5 weeks straight. But if it's your party, you don't even see it on the news. So
Another good point that I heard made last night. Somebody was touting Dr. Fauci, and they said all he wants to do is, save lives. And the person corrected and said, no. He wants to save people from the coronavirus. But what about
I don't think he wants to do either one.
What about the other lives that are being lost? The lives that are falling down because of suicide and drug abuse and child abuse and mental breakdowns because people are so scared and worried and afraid. What about all those? Don't those lives count too?
Well, no, we don't mention those things. Those things, you don't want to mention that because we want to keep the focus over here on. Oh, and by the way, we want to keep it on the coronavirus. Where if somebody dies of pneumonia, make sure that you put it down as coronavirus. Or if somebody dies of diabetes, make sure it's attributed to the coronavirus.
It comes with a check.
Or if somebody dies of old age, let's make sure that it's the coronavirus. I mean, the moment something like that happens the first time, everybody should just stand up and yell and scream, "Hey, what are you doing? Why would you be paying hospitals to say it's the coronavirus when it's not?" And stop it right there. And don't let them get off the hook and go to another subject. Stay on point. And take it right from there, get the person, and take it right up the ladder. But we don't do that.
Have you heard of the book, The Road to Serfdom?
Yeah.
Frederick Hayek. He warned in 1944 that wartime mobilization would lead to a massive expansion in government and a disastrous loss of freedom. Well, it's happening again. Just read Nancy Pelosi's $3 trillion far-left wish list. This thing is all
disaster. But you see, money means nothing to them. They had control. Why do they hate Trump? Now they hate Trump. They hate Trump because apparently he's not one of them. Now, George Bush and Barack Obama, they're the same. I mean, you've even seen that picture, right, where they take George Bush and Barack Obama and they put them together. Have you seen that? It's incredible. It's a picture of George W. Bush and Barack Obama. Bush is on the left, Obama's on the right, and in the middle, they put them together, and it's amazing. The person in the middle, you can't tell whether it's Barack Obama or George W. Bush. No, you can't do that with Hillary.
ASU is here to help Arizona this summer with discounted pricing on its.
But it's interesting. Not only do they look alike, it's the same party. You've got the same people in the same agenda. The globalists ran wild after Reagan got shot. The globalists ran wild. And if you look at the advisors, the cabinet advisors, I don't care. I mean, my two favorite presidents were Reagan and JFK. Right. So figure that one out. But my guess is that today, in today's world, JFK would probably be a Republican. But, it's interesting that the cabinets of these people were filled with, globalists. So, I mean, these people, this thing started, it didn't start with the Federal Reserve because the plans were there long before the Federal Reserve. what had to happen with the Federal Reserve is you had to have people like John Astor, and there were two other gentlemen that were very wealthy that would have stopped the Federal Reserve, but guess where they were? They all died together. You know where they were? They were on the Titanic.
Yes, you're right. They were.
Was that an accident that they were on the Titanic and the other people weren't?
Yeah,
No,
I don't
of course
think so.
not.
I don't think
Of course not. Those were the people that got in the way and would have gotten in the way of Rockefeller and Morgan and those guys. But put them on the great Titanic. And did somebody know that might happen? You know, gosh, so many coincidences.
So many. This $3 trillion bill
9/11,
that Pelosi has pushed through would rewrite our immigration laws, federalize elections. It would allow federal prisoners to go free. It mentions dope more than it talks about jobs. It references cannabis 68 times. It would expand Obamacare. And this gentleman, this congressman that's speaking here, he says, and let me end as I began, it would cost $3 trillion. And in case you don't know what 3 trillion is, that's 3,000 billion dollars.
Yeah, and by the way, and at the peak of our empire in 1970, when we were #1 in the world, literally in everything, including education and manufacturing. How about that? But at that time, and we were the leading producer of oil, I think, too, in 1970. But again, at that time, it took the next 10 countries to match our GDP. So that's how you really define an empire, when it takes many, many other countries to match your production. Our total production of goods and services at that time, literally at our peak, I mean, in history, that'll go down as the peak of the American empire, no doubt about it, for that reason. But at our peak, we had just eclipsed $1 trillion in the production of goods and services. And now they're going to give away 3.
Wow.
Oh, and by the way, do they give that away to us? You know,
I can't get my hands on a dime of it, so.
You know who these giveaways go to? Now, again, this time people get people get $1,200, etc., that type of thing. But
and let's face it, that's not a huge amount of money. I mean,
no, but how much did you get in all the QEs and the Operation Twist? Then did you get your checks then?
I didn't.
No, I didn't, and I don't know anybody else did, because the giveaways and all this money that they're producing, guess where they go? They go to the bankers who speculate with your money and lose the money.
Yeah. Right.
So they don't have downside risk. They don't know what you and I have downside risk. You know what that means. I know what that means. Jamie Dimon doesn't know what it means. He said we don't have downside risk.
Banking. Oh my goodness.
If I lose money, what you pay for it.
Exactly.
You people pay for it. Yeah. And you pay for it because you're what we call the useful idiots. Mm-hmm. We have names for you people. Mm-hmm. We have 2 names. One is useless idiots is the one word in their viewpoint.
And the deplorables. And the deplorables.
And the deplorables, and then I got useless on my mind, feeders, but that maybe it was useless feeders. That was a term by Henry Kissinger.
Was it feeders or eaters?
Useless eaters. I'm sorry.
Yeah.
Useless eaters.
Incredible.
So that's and nonetheless, with all that going on, see, most people don't even know about that.
It's time for every American to rise up and get themselves
useless
educated.
eaters. In the ideology of Nazi Germany, a person with a serious medical problem or disability, but if you do that and then you put Henry Kissinger after it, you'll find out something a little different, which was in his book. The Russ Craven, the elderly are useless eaters. My idol Henry Kissinger on how to deal with the sheeple. So Anyway, it's amazing. But all they do and all they have to do is put stuff on the news. I mean, it's amazing if you watch the different news channels, you realize if you switch from channel to channel, you see that big headlines on one channel are not even, that are news, serious news, are not even mentioned on the other.
Right.
I mean, the Pfizer report, the lies and all this stuff, I don't think they mentioned that on CNN.
I mean, I'm telling you, if you want to go crazy, spend 30 minutes watching MSNBC and then go spend 30 minutes watching Fox News and then go back and forth a couple times. It's like we're living in some kind of multi-dimensional universe, which I'm not saying we aren't, but I mean, there's two versions of reality out there. And I think you got to pick one.
Yeah, it's very sad that you see when they changed the education system, the education system, particularly at universities, when this used to be the case, was based on Socrates, where you argue out a couple of points, and you put them up there and you argue them out till you come up with something. Mm-hmm. And now there is no freedom of speech. These, like I say, we were taken. The reason they hate Trump, and I think this will come out in history, and somebody will pick up on it one of these days, is that we were taken over sometime, probably right around the time Reagan was shot, I would think. But at that point, one of the great New World Order guys, and really a very powerful man, George H.W. Bush, big player, far bigger than Clinton. That's why Clinton, you notice the strong friendship between George H.W. Bush and Bill Clinton. I remember when that first happened, I thought, what's up with that? These people are supposed to be like,
mortal enemies.
Exactly, But Bill was how many sons do they have? He was like the fourth son. I mean, the children, George H.W. Bush's children, call Bill Uncle Bill and Hillary Aunt Hillary. I mean, they are family. You can bet that that the Bushes didn't vote Republican. The great Republican family. I will bet you they didn't vote Republican in this last election. This election isn't Democrat and Republicans. It's globalists versus freedom. Period. And it's no different than history. It's nothing different than what we've seen throughout history. What did the king used to do when you were having bad economic times and there might be a threat to his continued leadership? Well, he'd go out and have his people go out and start a little battle between the serfs and the southeast quadrant, the south against the east and the north against the west, and they'd go in and have some kind of a battle, and you'd do the divide and conquer. You'd say, gee, so-and-so said this about you, I heard that. They'd go out and plant the seeds. Pretty soon they'd go at it, and they'd be beaten down, and then they'd come draggling back to the king to save them. It's same deal. So they beat us up into, put us in debt and take away your house, your business, and your money, and then you're looking for a handout, and meanwhile your kids are getting brainwashed going to school, and we're all going, okay, well that's good. So and by the way, that's the way it goes in history. You, as I've said 1,000 times, you go from republic to democracy to dictatorship. What's socialism? Dictatorship. Do we have the dictatorship already? Oh no, we're still a democracy. Really? How come they're telling you to get a vaccine then?
Yeah, this whole vaccine business.
How come you have to be indoors? How come you have to wear a mask? Oh, well, that's health. That's a different story. Is it? Did more people die from the flu or from the coronavirus? It's like
that's a very interesting question right there that you pose. I've got something here.
But by the way, adding on to that, is it healthier to stay inside No, it messes with your natural immune system. Your natural immune system is strong amongst other people, And is it healthier to wear a mask? Look that one up sometime. Shouldn't be walking around with a mask on. All these things. Once again, by the way,
some say the isolation saved lives, or the mask, or this or that. In New York, it looks like the shutdown actually added to the death toll. 66% of New York hospital admissions were from people who were locked down at home. And that's before you get to the suicides, the substance abuse, the child abuse, the loss of health insurance, the lower life expectancy caused by shutdown-induced poverty.
Yeah. I mean, and my thought would be, what do you expect? What would common sense? We don't have common sense anymore, so nobody even goes there. But if we did, my comment would be, what do you expect? What would you think would happen? Why would this surprise anybody? This is, why would anybody be surprised? So, this is just, it's amazing. If we get out of this, and the one guy that's there helping you, and I just wish that it would make it so much easier if Donald Trump, unless we're really getting fooled and he's part of the elite as well, and they're just doing this ebb and flow type of thing. I really hope that's not the case. And if it is, they've done some play acting that's just absolutely phenomenal.
Somebody definitely gets an Emmy out of this.
Oh yeah, I mean that's play acting that you wouldn't believe. But I believe that it would have been much easier had Hillary won the election, and I believe that this anger is there because I think he does want to expose these people. But the problem is, I don't know why he still got Fauci around. This guy that he just appointed, comes out of the cesspool of, Fauci. Why has Fauci been there through 5 administrations? Why do I have a picture of Fauci with David Rockefeller, Bill Gates Sr., George Soros, etc.? Why would he be with those people? I mean, those are literally the heads of the, the globalists.
The technocrats.
He's a globalist. Fauci is the plant. Pharmaceuticals, make another comment. There is always something better than a pharmaceutical. And doctors are finally coming up and saying this. Some of the best doctors out there saying that, pharmaceuticals for the most part just mask a symptom. How many people have been cured by a pharmaceutical? I don't know anybody.
I guess
I think my mother died because of them.
Well, my brother died from chemotherapy, but of course, if it hadn't been for the chemotherapy, I suppose the cancer would have killed him. So I don't know the answer to that. I don't.
Anyway,
that's an interesting question. Who do I know?
But
that has
pharmaceutical is about. There are 2 types of drugs that came in the 60s. There were the recreational drugs for the young folks, like us at that time, to kind of mess us up. And then there were pharmaceuticals for our parents. And now, of course, by the way, if pharmaceuticals are so good, and if the Surgeon General and all these people have done such a good job with medicine, because there's no question that medicine has advanced, but medicine as a whole has moved completely away from the Hippocratic Oath. Nobody's curing anybody anymore. We just want to treat people.
You just mask the symptoms. Hey, I've been reading this book off and on about Laurel Canyon. Are you familiar with Laurel Canyon and the fact that all of the rock stars of our generation that gravitated there, because the whole hippie peace love movement started there in Laurel Canyon long before it hit what's that area in San Francisco, the Haight-Ashbury?
There's probably some truth to that.
Almost every one of those guys and girls had parents who were career military intelligence and government officials.
Yeah, you're talking about Jim Morrison, and for example, is one of the classic.
Think of the guy's name that did all the research. He's passed now. You know, he may have let too much out of the bag. One
of my best friends, the guy I speak with every day, kind of grew up in that area, or spent a lot of time there. His sister was one of the well-known groupies of the era, and very well liked. Really a nice gal.
I'm going to send you a link to this book. It's just a mind blower. It's a PDF, so you can just download it for free and just read at your leisure. But
how cool!
I'd
love to
put down.
Yeah, it's that was an exciting time, and Laurel Canyon. Johnny Rivers was a friend of mine when I lived in Malibu. Johnny lived in Laurel Canyon. Not part of that thing with Jim Morrison. He was a little bit different, but I know what you're talking about. Pretty interesting stuff. Yeah, that's
Frank Zappa. I mean, it's just the way.
Well, I know there's a big number of them. It's wild, and Laurel Canyon is it's an interesting area. You know, it's directly north of the Sunset Strip. It's directly west of the Hollywood Hills. You know, it's south of Studio City. You know, and it's east of Beverly Park. I mean, it's just right. It's kind of right there in the middle. You know, Truesdale Estates. All this. That's a nice area. And I think it's right in the area there where they filmed, what was that movie with Leonardo DiCaprio and Brad Pitt recently? Something about Hollywood. At
the very top of Laurel Canyon, there's a huge building that even before all the hippies came to Laurel Canyon, it was a CIA operative. It was called Lookout Mountain, I think.
Yeah, I know that. Yeah, that's right. I know what you're talking about. It's funny. This is ringing a bell because it was a big CIA place. And then somebody bought it. One of the people, I think, an individual purchased that.
Yes, you're right.
Check and see. I can't remember who it was, but this is kind of ringing a bell in my head. Yeah, that CIA place was done. And it's interesting that, of course, the CIA and the connections with them and Hollywood, and there's a very interesting. Oops, let me see.
If you need to grab that, you can. In fact, we'll have to.
I'm not going to. I just I hit the answer and hang up.
I'm going to be sending you the PDF to this. Weird scenes inside the canyon. Laurel Canyon covert ops, and the dark heart of the hippie dream. Here's the guy, David McGowan. I'm telling you, this is spellbinding. Reading this.
Oh yeah, please send that. I'd love to read it.
Will.
Yeah, I'm aware of that stuff. There's a very good. I wanted to mention something. You know how the censorship. How do you control the population? You lie to them. Pretty soon they'll like the lies and want more of them. We've got to that point. You censor things. We've got the censorship going. It's amazing. But what I was going to say is YouTube, does a great job, and you can figure out how to fix your car and your washing machine on YouTube and do a bunch of good stuff. Very helpful. But they are part of the censorship, the same censorship that the Silicon Valley guys do with Facebook and Google and everything else. But YouTube is big on it. And when you get something that's very, very good and very poignant, and it gets right to the heart of the matter, and it backs it with factual evidence, it's gone in a heartbeat.
Oh yeah, there was a video the other day that people kept posting links to, and as soon as I could get to it, it was gone. I finally caught it and downloaded it. I'll find that and I'll send it to you.
Sometimes,
It's about this
yeah,
lady
sometimes,
doctor. This lady doctor who's exposing all this nonsense about Fauci and all the. She just blew the whistle on
Judy
everybody.
Mikovits.
Yeah.
Judy Mikovits.
Yeah.
Judy Mikovits is her name. She worked for Fauci. You notice what's happening when you have a corrupt society? When you have a whistleblower, for example, one of the great whistleblowers is WikiLeaks, Julian Assange. I mean, here is a guy who's done a great job, and I think he's rotting in a jail somewhere now. And there's nobody there to help him. No free people there.
I thought he got out, but maybe they locked him back up.
I hope he did. Because there's a hero. Edward Snowden, another hero, but what do? They make him out to be a bad guy. But he's exposing and trying to tell us what's going on. Judy Mikovits, great doctor in her own right, sees what Fauci is doing and exposes it, and they put her in jail. And then she had a gag order that went for like 5 years, and finally just at a hearing.
It says at a hearing
I'm
at
just
Westminster.
looking at your deal here.
So let me go to news and see if there's anything more current.
50 weeks in prison.
Assange's partner says his life is in danger. Okay, this is from 2 weeks ago.
Yeah, this is just so wrong to do that to him. What a...
The partner of WikiLeaks founder Julian Assange said on Friday his life is in danger while he is held in a London prison during the coronavirus lockdown. Assange is fighting a request by the U.S. to extradite him to stand trial for conspiring to hack government computers and espionage, but hearings scheduled for later this month will not go ahead because of the lockdown.
Why wouldn't Trump, there's a guy that you ought to just get out of jail right now. What did he didn't do anything wrong. The old thoughts in America, we all think that you have to do something wrong to go to jail. Nowadays, when you do something really right, you really run the risk of going to jail.
I mean, this guy already spent 7 years, self-quarantined, if you will, in the Ecuador embassy in London. That was no picnic.
When you and I were growing up in this country, when this country was great, these people would have been heroes. If you shot a robber that was coming into your house, you'd be a hero.
Yeah, what about the guy on the horse? What was his name? The British are coming. Paul Revere. Yeah. Oh my, Garrett, this has been
By
great.
the way,
I've enjoyed this so much. Maybe I'm praying John's going to be better, but maybe he can join me again one day later this week.
Well, I'd love to. I'll share a couple of charts if you want.
Yeah, absolutely.
Maybe there isn't any time.
No. I got time. If you got some charts to show, I'll shoot it right over your way. Stand by.
I think my stuff comes up on my left screen, as I recall. So I'll put my stuff over there.
Okay.
Well.
Okay, there comes the invite.
Oh, here we go. Show my screen.
Okay, I'm looking at a nice big chart of the S&P 500 cash index weekly.
Yeah, now I'm going to move the other thing. Oops, I guess I'm not. I was trying to move the for me that thing that
the go-to webinar thing. You might be able to just drag that to a different screen.
I used to be able to do that. Oh, wait a minute. There's I'm dragging it a little part at a time. That's not very. Oh, there we go. Okay, now I can see. Now I can see what I'm doing. Okay.
Okay, now I'm seeing a screen. Yeah, now I'm seeing the chart.
Okay, I can see it too.
Okay, now I'm gonna hit mute. I'm gonna hit mute on my end for just a few seconds, but you keep going because you've got the screen and you've got the mic.
Yeah, this is the S&P cash index, as it says here, and this is a weekly chart, so it's a big picture and take you back to the low in 2016 over here. But what we saw here was a top, a sell signal here on my indicator that's come down, buy signal down here, and we're still, in a buy. What's happening here? These two lines that you see here are 40 and 50 week moving averages. 40 week moving average is like a 200-day moving average. So I mentioned a while back that with these two being together like this, there's a real draw for price when that happens. And these lines are still heading up. This is going up, but it's losing momentum. We're losing momentum down here as we get close to these points. Now they're up at about the 3,000 level. One of them's a little bit beneath it. The 40 is a little bit beneath it, and the 50 is a little bit above it. So whether we get up there, it's only at this point, you're looking at about, I mean, we're 1% away. So whether we get there or not, we'll just have to wait and see. But let me move to the daily, and we'll take it, take a closer look. What's happened on the daily is we have moved up. This again is a 200-day moving average here. So we haven't quite come up to that, but again, we're approaching it. And you get a different picture in the daily. In the weekly, you're kind of moving up. In the daily, you're moving up to about here, and now it looks like you're kind of going sideways. You've got this, the bands coming down, the bands going up, but they're flattening on the top. And you've got a top here, and we've just come up to it again. So we've got kind of a triple top. And at this point now, my power readings here at this top, this was a lower peak, so it's a divergence, but I think price might have been higher here. Let me find out. This high was 29.5486. This high was 29.45. So it wouldn't be a true divergence. This price would have to be a little higher in order for that to happen. But you get your sell signal here and you get this correction. Right now, we're coming up again. The closest we've been to the Bollinger Band, probably since this point over here, which would have been January 17th, I believe. Let me see. January 21st. But I think on the 17th is right here where we were above that line. We haven't been above it at any time since. And right now, we're getting very close to that upper Bollinger Band. And we're set up, if we turn today or tomorrow, in all likelihood, since this is higher than over here, we would be setting up with a divergent sell signal at the top of a Bollinger Band. So that is something that we could see. Some of the other things, here's the same thing with the Bollinger Band, but I wanted to go over maybe some other. This is all daily over here, and you can see here's the setup. You can see that this is lower than here. These are, this is advanced decline information here. This is a McClellan oscillator. It's come from, I think, negative 200. Let me put it right here. Let's see. McClellan oscillator, negative 124. It's at a positive 60 today. So it's come back up to meet this downtrend. The 10-day AD line is down here. It was quite negative here. Negative 594. And now it's a positive 69, positive 70. So this is a huge move with the market rally. So these things aren't going to get up probably to where they were on April 29th, which is up here at a positive 409, I believe. And over here, it's up above 300. And over here, probably a little over 300. They're probably not going to get up to that high, but they've made a big reversal. This is an RSI on the relative strength index on the VIX, and that's usually close to a sell signal. When it's under 40, it's at 39 right now. So we're coming into what it's saying is we went from being oversold last Thursday, and here we are just at Monday, and we're getting into overbought territory.
Let me just interject that I think. I realize that everyone's excited and happy the economy possibly be opening and whatnot, but You know, and I hate to be the pessimist or, you know, Dwayne the downer, but I think we ran up too far, too fast, and we always know the price we pay for that.
Yeah, I mean, it's again.
I don't know if I'm on the same page with you in that thought, or because I just got back to got my headset back on, but.
Yeah, absolutely, Dwayne, because, you know, at this point, if you think about what's happened, we've probably lost, what do we have? You get different numbers, but I believe our unemployment is around 25%, and maybe more.
I think we've lost more.
Yeah, we've lost, I'm probably conservative on that. We've lost 30% of our economy at least. Obviously, the robber baron companies are doing well.
Yes,
so
that's just it. This whole market is riding the back of about 5 stocks.
Yeah, and exactly. And you've got, I'm starting to see, I've got sell signal here in my 65-minute. I'm having early warning sell signal, but not one yet on my indicator. You're up here at 97 and probably 97 and 97 on the stochastic. Let me get that reading. Those readings are 97, 96.95. So you only can go to 100. So you're pretty high there. You're up at almost 70, which is my green line of overbought line on the RSI. So we're getting up there. You know, can we go higher? Yeah, we certainly can. But it looks to me like we're really into a point here. And if you look at this, I mean, this is a 618 retracement roughly from this high. Now down here, let me make a couple of points that are not being thought about at all.
Okay.
When we moved up to here, we moved going back to when they first started about, guess what? The Great China Trade Agreement. Remember that? Mm-hmm. This index right here, this S&P, rallied from this point to the high. Again, I've got to go back out of the picture here, but it rallied 1,047 points to this top up here.
Okay.
And what was it based on? Well, it was based on the expectation of this Great China Trade Agreement.
Hope and hype.
Yeah.
Not great trading strategies, by the way, folks. Hope and hype. I mean, hope is something we all should have. Hope springs eternal, but it's not a trading strategy.
Right. And in 1,047 points on the S&P. Now look at this.
That's
this is 3,400
points, by the way, folks. There's a 10-to-1 ratio there between the S&P and the Dow.
Yeah. Used to be 8, you know, and so it. But here you go up to here. It added 1,047 points for the most part, based on the expectations of the China Trade Agreement. And then the China Trade Agreement happened. And while it's a much, much, much better deal than an Obama or a George Bush or a Bill Clinton or a George H.W. Bush would have done, all of a sudden nothing ever really happened, and we probably got a serious trade war going on now. So theoretically, all that should be removed. And it was right here. So now, at this point, it's like, okay, that's reality right there. See where my arrow is? That's at the low.
I see it. Yep.
That's at the March 23rd low. That's reality. And that's right there is probably a fair valuation, because all of this was China Trade Agreement and it didn't happen. So now we're back down to where we were before it happened. So that's okay. But now we've rallied this amount, a 618 retracement from here, based on what? Oh, I think they're going to reopen the economy. Excuse me? Is that positive? Oh, well, they shut the economy. And what did that do? Well, it removed 30% of our economy for the most part. So wouldn't you just take this level here, because this is now fair because we removed the China Trade Agreement, and now we've lost 30% of the economy. So 30% of this is 660. So if we subtract 600 from there, don't we get down to about 1,600? And isn't that where we should be? And we're at 2,900. Isn't that 50% higher than where we ought to be? And then, pardon me, more than that. I mean, if based on what's really happening out there, and if there were a connection, and I realize obviously there isn't a connection, but we ought to be down at 16 or 1,700. And we're about, what, 1.8 times that? A little under twice that? 1,600 twice would be 3,200. So, we're almost, we are more, my point is this, we are more overvalued here than we were here. This happened there. What's going to happen here? And the question is, don't let that get into your mind, because we're not doing this logically. Remember, we're not in a logical world anymore. And what could I say that would be bullish? Well, just what everybody's looking for. There's two very bullish things. People are going to go back to work. And what's the other one? Well, it's summer. Is summer bullish? Yes, it is. Sorry.
Well, they used to say, selling may go away. That hasn't proved true of the last few years.
Let's see. It obviously depends on where you are, but here, let's take a look at it. Let's see. Here's May. Let's do this. Let's do April. Here's April 30. Boom. There's May. Now, by the way, April 30, wasn't April 29th our last top? April 29th was our high, I believe.
Stand by. I'm going to check my chart.
Here, I'll go down to the daily. See that high right there? That's April 29th. Okay. 29.54. We haven't now. We got there now. We finally got there now.
The most recent swing high. Yeah, I was just pointing that out this morning. We hit a high on the S&P on the June contract of 29.5975. And that's where funny. I told my guys this morning to beware, because we expect resistance if we touch that price.
Yeah, it's funny how I had a chart that pointed out some of the great May collapses. This is the monthly, but I wanted to go back further in time. Even I think 2001 May. A lot of your real downside moves have followed May tops, but in reality it's just another month, and you've just kind of got to take a look at things as to what they're looking like in April. But that does happen. That's the split time, of course, for the bullish half of the year and the bearish half of the year too. So your bullish period starts in typically the market bottoms in October and runs up. You're looking at the 6 months from October to May, or to the end of April, as being the most bullish, and then the bearish months, from May to October. May to that's kind of in general the two halves of the year, and sometimes of course you get your summer rallies and so forth and so forth. But anyway. I was just gonna point those out. It's interesting to see. Let me see. I had on the shorter term basis, I think. By the way, are you a silver fan? Isn't that a cool chart?
I am a silver fan, and I'm not a happy silver fan at the moment. But say something to encourage me, please.
Well. This is long term. This goes back to 2002. In fact,
trust me, I'm a long term guy when it comes to silver.
Yeah, silver made its low in 2001 and 1999, and then you had this move into early 2008 here and back down to the low, and then you had the great move up to here in 2011. and we've been falling from there. And in the case of silver, made our low just 2 months ago, and we got down to a low of 1177.
Yeah, it's all kind of foggy because I didn't sleep a lot those nights. So go ahead.
Interestingly, though, if you go back here to this low in 2008, this blue line's a horizontal line, and we came right down to that prior low. Isn't that interesting how that works?
Boy, isn't that? Yeah, folks, there's going to be there's a lot of these algo guys and these high frequency. There's people out there that are going to tell you support and resistance is broken. It's old fashioned. It's horse and buggy. Oh, come on, get with the times, man. You can't trade off support and resistance anymore. This is the 21st century. I show that to be just a bald-faced lie every day on this radio show. Every day.
I remember in 2000, leading into 2000, that it was a new era. And I'm going, well, it was a new era. I mean, you went from the industrial age to the information age. So yeah, it is a new era. So I'm not going to argue.
At $400 to $4, but anyway.
I said I'm not going to argue that point. But then they said in new eras, and then they followed it up with new eras have to be valued differently. And I said, well, if you look at the market, I think they are being valued differently. I said the question is that valuation going to stay? I said, because you can get skewed. You get skewed, over the long term in both directions. Your value, the last two periods of real value, we haven't gone down to a real value low since 1982, and prior to that, 1974. Both times, the market got down to a point where it sold at book value. Now we're a multiple. I don't know what the multiple is now, but it's we're at quite a multiple of that. But anyway, that situation. I think you're seeing a lot of that now. We're having. You take a look at some of these stocks like Moderna, which is the vaccine, and Shopify, and a whole bunch of these ones that I've got the call symbols there, but I don't know what they are. Hang on just a sec. I'm sorry. I'll call you back. Okay. I'm sorry. Excuse me.
No worries.
Anyway, but they always these things get ahead of themselves, and people get excited, and that's what makes a market. And this market, I think we're going to go up. I wouldn't be surprised if we made a new high this summer. I just think we're very close to a correction now. That's all. I think we should have one.
Now, when you say this market, you mean the market in general, or are you still talking silver? Or?
Oh no, I'm sorry. The market. I kind of diverged off this silver chart. Okay. We were talking about valuation. But so I think we're due for a correction in the stock market.
Yes,
and it'll be interesting. What's happened? We should have hyper deflation really for what's going on. I mean, it really should translate to that. We've lost a lot of business. We've lost a lot of industry. We've lost a lot of people are out of business. But again, we're still playing this game. Something big on the downside is probably due, and
a minor correction for me on the S&P brings us back to 2840. A more serious correction brings us back to 2770. After that, 2720, and then the really big one is 2620.
Yeah, I'd agree with you on all of those. 2725 was one I had in mind, and it'll just be interesting to see. It's interesting you mentioned that. This thing on silver is kind of interesting, though. This low here and this low here are essentially identical. This trend line from here before this launch period through this low and through this low got you down to give you a hint of where that might bottom, and it did. A parallel from this off this line catches these highs, and this high here just before this launch. So those are pretty good lines. This is just a little triangle that I've had drawn on for a long time. It's based on this low and these two lows over here. And it's close to this low and kind of close to that one, and right on this one, and right on that one, and hitting a bunch of them in here, and hitting here and hitting here. There's a real trend line. Trend lines have attract price, so it's attracting price. So there's that line, and then you can't go up. You can go up here if you want, but this is an extreme. It started from down here. So this is a railroad track extreme here. And then this
I call it an outlier.
Yeah, exactly. And this one here is the first bounce off the initial drop. So that's probably, then you start to bounce, more into reality. So if you want to look at a real price, you come in here, just before it runs up. And if you extend this line back, you probably come pretty close to that. So I'm drawing this line from here.
I think the next bull run begins if we can hit 30 or above.
Yeah, this is my triangle here. So I think, what have we done? We've come down to it, we bounced above it, we came down to it, we went below it, we rallied up to it, we fell down, went above it, came back down to it, went above it, came down here, went way below it here, and now we've rallied back up to it again. So we've probably got, I think we're going to have a sell here on the metals fairly soon, but I could make the argument that if logic were in the room, and of course it's not, because we're not supposed to think logically
well,
anymore.
Now physical, if you wanted to go out and buy physical gold and physical silver, especially physical gold right now, if you want to go to a coin shop or you want to order online, physical supply is in very short supply.
Oh yeah, it's hard, and it's hard to get, and it's interesting. That always makes me think a little bit in the other direction. I mean, when everybody's got it, maybe it's something that you need, but maybe they're going to create some supply pretty soon. I don't know. We'll very logically. I mean, I was one of the first guys in the country to get in gold. I mean, and when I got in, it was at 35 for years. So,
right.
But I'm not we should have this thing should, in other words, what does the overall big picture long-term cycle say when you finally top out? Is it followed by inflation or deflation? Well, you better hope it's followed by deflation. Because if it's followed by inflation, then you got a Weimar Republic situation where a loaf of bread will cost you $1 million, and you're in real trouble. You better hope for deflation. Normal scientific looking at the market in the historical cycle would say that you would get deflation, because that's what, if you didn't have these criminal globalists running it, that's what you'd get, is deflation. And you think, oh my gosh, that's horrible. All my assets are going down to a lower number, and this, blah, blah, blah. But what happens there is the good thing. That's not what happened. Remember when they took away everybody's homes back in 2008? What should have happened is real estate should have gone way down, and rent should have gone way down too, right? I mean, if there's a lot of real estate and this and everything's going down, rent should be half of what they were.
Yeah.
But these criminals took your home and they took it for 10% of what it's worth. So there's no way in the world they could lose. And then they jacked up rents and turned it into an income vehicle. What did they do? They created a bond in 1981 is what they did. Something that you bought that would mature at a much greater level no matter what happened. And they get paid a ton of money while they're holding it. I mean, this is criminal activity. and these people, the controllers, have done that and done it right along. And we go, oh, thank you. Look, the Federal Reserve saved us again. Thank you so much. It's like you just want to go running around knocking on heads and going, hello, is there anything inside there that still works?
Yeah, right.
Oh, well, I'm a senior VP at my company. I said, you missed my question, didn't you? Anyway, that's we are fighting for our freedom, number one. And with respect to the Christian Financial network, we're fighting good and evil. I'm kind of a market historian, and I in the area of Bible prophecy and things like that, there's people that are a lot better on those things than I am. But this, to me, just as an observer who's been around observing for a long time, this to me seems like we're entering the battle between good and evil right now. And one thing, the most important thing, if that's true, if there's any truth to that at all, I think it's very important that people know that. Wouldn't it be nice to know? Some people don't. Some people are out there walking in the tulips and have no idea what's going on, or there's a battle, or anything's wrong at all. That our education system's been turned upside down. It takes your children and turns them against you. I mean, the horrible things that have really happened here that we've allowed to happen, which is just part of walking down the path of history. But you need a certain awareness, because freedom, unlike, I'm sorry, Mr. Bernie Sanders, we're not entitled to anything. And one thing for darn sure we're not entitled to, and history will attest to this from the beginning of history, and that one thing that we're not entitled to at all is freedom. There's all sorts of people that want to take that away from you.
Oh, yeah.
So,
And they're doing a good job of it.
I think they've done it. I think they have taken it away from us. They just haven't taken it all away from us. And
at a time, it's like the frog in the pot of water. You just keep slowly turning up the heat, and I'm pretty soon
I'm really, exactly, and I'm really kind of conflicted, because the thing is, turn it over, let God handle it. Well, of course that's what you do. I certainly can't do anything. So that's a pretty good argument there. But then, didn't God said God helps those who help themselves? Or, I mean, there's all sorts of conflicting things there.
That's actually a misquoted scripture, but you're right. It's one that we're all familiar with.
It probably
it's kind
is
of like
misquoted.
Money is the root of all evil. No, that's not exactly what the scripture says. The scripture actually says that the love of money is the root of all evil. There you go. And money that's made that can use to help people is a wonderful thing. The other thing, though, is Edmund Burke said all that's necessary for evil to succeed is for good men to do nothing. Mm-hmm. So that conflicts me, because that makes sense to me. And I thought, gee, I should do something. Maybe I should share some thoughts here. And yet one of the smartest people I know says, we're living in a pretty good place no matter what's going on. You can't do anything to change it. I can't do anything to change it. And we're here to enjoy ourselves. So maybe those people walking through the tulips who don't know that there's any problem at all are a lot smarter than I am. And I'm certainly open to that possibility. And maybe, if ignorance is bliss, blissful is a pretty good state. So, they might be right. I kind of have an interest in knowing and learning things and stuff like that. So that forces me, maybe to be in this area and to try to share some of that. But maybe I ought to just be quiet and go walk in the tulips and not worry about it. No, you're doing a good thing, brother. And I appreciate you coming on the show, and I appreciate you sharing your thoughts, your viewpoint, your ideas. And again, if you have free time later in the week, by all means, I'd love for you to join us again. I'm hoping, John, every day I keep hoping he's going to be better and be back strong as ever. But
have you called John, or is he taking calls?
I spoke to him this morning. Yeah, if you call him, he'll take your call.
Yeah.
Maybe he could use a little encouragement.
Yeah, I was concerned. I want to go in and make sure that I've got that. So I will give him a call.
Okay, and if it turns out you don't have the number, just message me and I'll send it to you.
Oh, you sent that PDF on Laurel Canyon, right?
You know what? I posted it, but let me actually email it to you right now while I'm thinking about it.
If you don't mind, send me his email. Does he do Skype too, or?
No, I don't believe he does.
No. If you don't mind, send that to me. I'll give him a call and give him some well wishes.
Okay. All right. Very well. I'll send you that link to the PDF, and I'll send you his phone number.
Much appreciated. I'd love to join you later in the week.
Okay. I look forward to it.
Always nice to share time with you and your audience.
Thank you so much, Garrett. We really appreciate you.
Have a great day.
All right. Bye-bye.
And a great week. All right. Thank you.
Guys, bear with me one second while I send off this information. Because, honestly, if I don't do it right now, I will forget. And later I'll be apologizing because I didn't. Okay. Done deal. All right, now let me put the charts back up. Okay, so you see where we are. This is on the daily. Okay, we're pressing up against this area. Remember the swing high, 29.59.75. The next day, you know what? I apologize. It was the following day we actually moved up to 29.65, and then the sell-off came, which took us back to the BBC. Okay. And so we're at 57.75, and the number overhead is 29.65. Now, there's no guarantee that we'll go up and bump up against 65. We very well could, but often what sellers do is, if they don't want to get left behind, if they sense a sell-off coming, they'll buy their ticket early. And if enough sellers buy their ticket early, then that means we won't actually touch 65. Could come sooner. So now I realize I got to show my screen. Here we go. Now I'm showing my screen. See, on this day, the green day, the high was 59.75. It was when the session opened that evening at 6 p.m. Eastern. We actually traded higher for a flash up to 29.65, and then everything came unglued. Took us right back to the BBC. I told you, price always reverts to the mean. In our case, the mean is green. We call it the BBC. When price is above it, we're bullish. We anticipate higher prices. And when price is below it, we're bearish. We anticipate lower prices. That's the deal. Okay. Good word for the day. Next couple days, we're going to talk about God and your money. Psalm 84:11. No good thing will he withhold from those who walk uprightly. What you believe about God and your money will determine how you pray and what you believe Him for. Now, you might say, oh, but money is the root of all evil. No, the Bible says the love of money is the root of all evil. That's in 1 Timothy 6:10. That means if you're a miser, God probably won't give you more. But haven't some preachers used the Bible to enrich themselves, you ask? Absolutely. And trust me, you would not want to stand in their shoes, their $900 alligator shoes, when they have to answer to God for it. But don't throw the baby out with the bathwater. The best way to tell if a $50 note is counterfeit is to place it beside a real one, the genuine. So here's the question. Are you looking for a reason to doubt God's promises, or are you looking for a reason to believe them? The Bible says in Psalm 84:11, "No good thing does he withhold from those whose walk is blameless." We all agree that providing for your family, getting a promotion, educating your children, and meeting other people's needs are all good things. So when you do what is right before God, you can expect Him to bless you, though it may not always be in the way that you expect. In 3 John 1:2, we read this, "Beloved, I pray that you may prosper in all things and be in health, just as your soul prospers." Now, that scripture will preach all day long. Beloved, I pray that you may prosper in all things and be in health, just as your soul prospers. Only when our children reach maturity and demonstrate responsibility do we entrust them with the keys to the family car, right? So maturity must precede prosperity. When you demonstrate maturity, you can go to God with confidence, knowing He'll meet your needs and bless you. Which raises the question, are you growing and maturing spiritually? That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.